Okay, welcome to the True Potential Monthly Performance Monitor for July. So what I'm going to do today is I'm going to start off by talking about basically the key big issue that we've seen in markets this month, which has been Brexit. And if we look at returns, I think the returns will come as actually quite a big surprise for investors, and that's a positive surprise. So let's look at the returns now. So starting off within local currency, UK equities were the best performer, and they're up over 4%. UK gilts up over 5.5%. And that's as investors look towards safe havens. So they look towards what they believe are safer areas of investment during what's been quite a testing time. Lastly, let's just take a quick look at currencies. And as you can see, sterling has significantly depreciated against both the dollar and the euro as well. And that is actually a positive for a UK-based investor. So for a sterling-based investor who's holding overseas assets, when sterling weakens, that actually adds to your return. Okay, so let's look exactly at what's happened over the month. What I've got now is a graph of the FTSE 100. So the FTSE 100 is the biggest UK companies, ones that tend to have a little bit more of an international bias. Okay, so as you can see, starting off with the month, FTSE weakened a little bit, and obviously you would expect that as the Brexit vote became nearer and nearer. And then around about a week before the vote, we started to see some positive gains, and that's because opinion polls, economists, people were believing that we were actually going to remain within the European Union. On the day of the vote, obviously all asset classes fell, so it was quite a negative day. But then after that, we've actually seen quite a big rally in the UK markets. So why is this happening? What you've got to realise is actually the result of the vote came as quite a shock to investors. But the vote itself, it was a very well diarised event. So investors, but more importantly, governments, central banks, they all knew that the UK could potentially leave the European Union. And this means that they've been able to prepare, to plan, to look forward to this. And that's exactly what they've been doing. So if we look at Bank of England, they've put aside roughly £250 billion to help shore up the economy. Within their power, they can reduce interest rates again. And as well as that, you've also seen George Osborne talk about cutting corporation tax to the 15% level. If we look overseas, what's been happening overseas, again, the key determinant of return here has been currency. If we talk about what happened on the day of the Brexit result, all asset classes fell. But for sterling investors, the overseas asset classes actually gave you a positive return. This shows diversification working. This shows diversification across asset classes, geographical areas, but also currencies, helping you navigate through that short-term fog that's Brexit. Okay, so let's look forward. So what's happening moving forward? I think the first thing that needs to happen is we need to get a more formal plan from the UK government. Find out exactly who the new leader will be and what is the plan for moving the UK out of the European Union. But behind that, you've got to remember that we still have the central banks there that are shoring up growth. And it's not just the UK. It's actually areas such as the US, Japan as well. They've all got plans in place to help shore up growth on the back of any fallout due to Brexit. Now, what is most important for investors is that they can't invest in one single area. Diversification is key. You're going to see a lot of disparity in returns moving forward. Here at True Potential, we use multi-asset investments. These multi-asset investments allow fund managers the flexibility to move in and out of different asset classes depending on what's happening in the market conditions. Okay, thank you.